to unmute himself.
Yes, sorry.
There he is.
Hello, Steve.
Right.
Hi, Scott. Hi, everybody. Thanks for joining us.
Yep. Right in the throngs of the test drive week. So Andy and I have been doing a lot of webinar duties today, but this is the trade of the week, and we're going to proceed as we normally do at 5 o'clock Eastern on Tuesdays. This is where we go over a couple things trading related, a couple things trade ideas, platform technology related, and then also discuss the current trades of the weeks, and just take it from there. Before we get into the content, just a reminder, the old disclaimer slide here. We are not registered advisors. We're not brokers. We didn't take all the tests that involve the stuff that they have to do. I'm drawing a blank on the word. Never mind. I'm drawing a blank. Fiduciary. We are not fiduciaries. We have not taken those tests. We're not licensed. So if you are seeking financial help or planning or advice, those are the kind of people you need to reach out to. We're a software as a trading service. We're content providers. And what we're going to show you today here are ideas of how to use the system and a couple of trades that have come and gone, and maybe we might even have time to look at some charts. But please do not construe any of this as investment-related advice. As Scott mentioned, we're still in the throngs of the test drive. People will get late word and straggle in, and you literally have until tomorrow evening to register before the end of Wednesday. So like Scott said, you can get 5 full days of trading days, Saturday and Sunday obviously not included. So it's still open for those that haven't done it. I took a quick peek at the poll that Scott was doing, and there are a lot of people in here that are on the test drive this week. And I'll come back to that because that's going to kind of affect our agenda a little bit and what we talk about. But the test drive people especially, talking to you here, Scott's going to have a pretty cool promo code if you want to turn that into a monthly subscription or an annual. But to remind you that Trade Ideas has a great onboarding system to help newer traders. You know, I think a lot of you saw today how we created that 4-hour technical support forum all week, Monday through Friday this week, to help people come in and get immediate help on a very complex program. So we had that going this week, which is unusual, but typically we have that same type of forum on Fridays. Friday support sessions, 11 a.m. to 2 p.m. Eastern. Other than that, Monday, Tuesday, Wednesday, Thursday, you're getting a 5 p.m. Eastern webinar. Yesterday was Jamie's trading office hours. Today is the trade of the week. Tomorrow is Q&A, unless we have a guest speaker, but nonetheless, that's typically on the docket. And Thursday is the trading studio, where Andy takes the reins and Jamie rides shotgun. So that, in addition to the live trading room that Barry Anderson hosts every single day, you can go in. It's a free room. You don't have to be a Trade Ideas subscriber. You can just create a free username and password and join the room and see what good traders are talking about, where they're focusing their attention in the market. But most importantly, having access to Barry, who's sharing his desktop there, using Trade Ideas technology, trading his account in real time. Quickly, yes, Michael, this will be recorded, and you'll be able to watch later. It's on our YouTube channel, Trade Ideas YouTube channel. It takes 4 or 5 hours to get uploaded, but you will be able to get a recording of that. And if you need help finding the link, you can always email info@trade-ideas.com. So a lot of help, a lot of concierge type of things available. What I haven't even mentioned here is the free one-on-one hour that you get with just us. So it's not a group environment. If you sign up for 1 month minimum or more, you can go into our auto scheduler and schedule 1 hour's worth of time. It's best to do that, you know, after you've had the product for 10 days or so. And that way you've got some questions and you've got some usage under your belt, and the one-on-one session makes a lot more sense if you come into it with a little bit of skin in the game and have got a few questions and at least try the product first. So all of those things together are why subscriber growth looks like this. This is just parabolic. Would be the envy of pretty much any other software as a service or fintech company subscription service out there right now. We're just blazing new trails here with the parabolic growth. And again, I attribute a lot of it to the onboarding and the customer support we have, but also the tools. The AI was introduced in January of 2016, and we just introduced some brand new charts as well that we've talked a lot about over the last week. So, you know, this chart doesn't lie. This is a very enviable chart for anybody in the subscription business, and we're very proud of that. So that's why we show that off. Quickly, newbie traders, put your fingers in your ears and say la la la, because this has no applicable use for you. The Brokerage Plus is a small segment of Trade Ideas users who are experienced traders and have their own scans and their own methods and their own strategies that they want to basically unleash and automate. And if you're at that level of trading and you have an Interactive Brokers account, well, we're still in beta, but at some point pretty soon we're going to release the Brokerage Plus for Interactive Brokers users, which essentially lets you trade your own custom strategies and things like that automated. So it's a cool deal. All right, here's the agenda for today. We're going to keep it pretty basic, pretty typical of what we usually do. We'll talk about the market recap and the action that we've seen, very resilient for sure. Quiet day for Holly. We'll have some comments and observations on the AI and what the AI did today. And then the moniker of the webinar is the trade of the week. So we'll talk about this week's trade of the week, which has not triggered yet, or maybe it won't at all. We'll find out, and maybe even pick up on last week's trade of the week and talk about some targets and how to manage. And then I'm going to go through a quick sector check, just kind of see what sectors look like they might be setting up if the market wants to move higher. We did that last week, and it's always a good idea. It helps, you know, chance favors the prepared mind. If we know that a certain segment of sectors are getting ready to possibly break out, and we can keep that information handy, well, when it happens, it's not so much of a surprise for us. And then, like I said, we do have a big component of the test drivers in here this week. So we're going to take a little time at the end after the sector check and just open up the floor a little bit. We can look at some charts. We can look at some basic feature questions that you may have. But that's going to be it for the content today. We may even finish early. So it's been a long day. Andy and I have been pretty much in webinars all day long. So if we end a couple 10, 15 minutes early, that's okay. All right, another quick question coming in. If there's time, I'd be interested to hear a review of last week's trade of the week, Crocs. That was 2-3 weeks ago. And I'll be happy to go over that for you as well. Andy will remind me. Okay. I'm just reading a question here. Okay, Richard, I'm glad you got that layout situation worked out. All right, so let's get right into it. Close that, and we'll go to, there's price alerts. We're going to go right to the SPY and kind of take a look at where we've come. That trend line needs to be adjusted, but it's really no longer even applicable because we bounced way off of it. And as far as I'm concerned, this is your line right here, 240.65. This was prior resistance and then became current support. We could not follow through and break down below that. And as the trend line got closer to that level, it kind of pushed the issue and forced the issue of the S&P moving back higher and not even testing that. Not so much with the Qs, I might add. I've actually deleted the trend line already because it reclaimed it. But we had a trend line running through here that basically was reclaimed by this gap a few days ago. Now, I've inserted an arrow into this gap just in case the market does want to decide to get weak. Today, it decided not to. It looked like it wanted to roll over in the morning. And then the buyers, once again, stepped back into this resilient market, which I've been referring to comically as a zombie market. You can keep firing bullets at them, but they just keep coming in the same direction, moving forward. So the Q's very much out of harm's way. They also had a very significant support level here, just like the S&P did. So I'm going to basically leave these lines in, these support levels. I took out of some of the other minor levels. I'm going to leave this one in right here only because it shows, kind of the level of a gap fill. This could be a breakaway gap. The problem is you never know if it's a breakaway gap until you look back in history and say, oh yeah, that was a breakaway gap. Otherwise, we have to be mindful and respect the gap that at any given time we could have some weakness and it might only take a day or two to pull back quickly and fill that gap. So that's one area of interest that I'm keeping open. Switching to the IWM, if we back out, it's just been consolidate, move higher, back, consolidate, back, move higher. But the last 3 weeks, we've just been kind of in this back and forth range here. On a weekly chart, it's even more pronounced that it's really kind of setting up. It's not going anywhere. The IWM is the ETF proxy for the Russell 2000, which is your small cap stocks, stocks with smaller caps, even under $5, etc. However, I've noted, if you notice, there's a blue line here. This blue line now indicates it's an active price alert. It's just waiting for IWM to trigger. And I've got this set on my price alerts as a working alert. And if it goes off, the price alerts are going to splash on my screen and it's going to say IWM new high. What that's going to mean to me in that moment in time is that the rotation may be occurring into the small caps. If we get a breakout in this index, if I were you guys, I'd start paying close attention to some of the stocks that are smaller cap, under $10, under $5, what have you. Some of the junk stocks, people even like to refer to them as, but don't be surprised if the IWM breaks out above that level, if we start to see more of the small cap stuff start to run. And then the diamonds, the Dow is the only thing I didn't really look at here. Here also we have a gap that was almost attempted to be filled today. I mean, let's look at this here. This is pretty much a washout bounce candle, which is a bottoming tail, and it dipped down into the gap. Maybe that's the best we're going to get because once again, the buyers, just like here and here, they just jump back in at the middle of the end of the day and support this market. This is the buy the dip market. It's most difficult market for short sellers in years that I can remember, and the party wants to continue. When you see stocks that maybe had a little bit of weakness, gapped down, had some weakness on the open, broke critical support, but buying came in like crazy after that support was broken and closed back on a nice rally back to pretty much where we opened, that is a hammer or a washout bounce type candle. So could be clearing the way for a couple more days higher. We'll see. The volumes weren't that great. The Dow had normal volume of 1.0 relative, but the SPYs and Qs still just kind of creeped higher on, there's 0.8 normal volume in the spiders and 0.6 normal volume in the Qs. So the bulls are still firmly in control of this market. We've tried to look at downside levels to be careful of, trend lines, gaps, and whatnot, but this market just wants to continue to go higher until further notice. All right. I'll answer that question quickly. Does Holly have a minimum price or market cap? I believe there are certain strategies that will not go under $10. Mighty Mouse is probably the one that you're going to want to pay attention to. If you see Mighty Mouse, that's going to be one that's going to come out more than likely stocks under $10 or even $5 in some cases. But it really is up to you guys to use the single stock window here on anything that you're looking at, including Holly trades, to quickly look up and see what the relative volume's doing, what the 5-minute volume's doing, what's the normal average trading volume for average day, where's the current volume. Those things are still, in your hands. But for the most part, we're trying, David, not to create strategies that are illiquid, but there's one or two in there that are, designed to be for smaller cap stocks. Okay, when I'm done, can I share my bouncers alert? I'll be happy to just drop that in there right now. Bouncers is essentially just a alert that's like a 45-minute day trade that looks for stocks taking out yesterday's lows and then bouncing back up into yesterday's highs. Here's a perfect example right here. I just clicked on KRE, which is actually a ETF, but regardless of, you can see that it took out yesterday's low right there where my wick is, my cursor. And here's today's candle, took out yesterday's low, no follow through, and bounced right back up into the range, just like a stock likes to breathe. And so on the bouncers that I'm about ready to share with you guys, it's essentially just looking for stocks that took out yesterday's lows and had zero follow through, and the short sellers had zero luck, so the stock just kind of reverts back to the mean and bounces right back up. So what I'm going to do is I'm going to save and share this alert so you guys can have it. And I'm going to drop it into the chat window, which is on your GoToWebinar toolbar.
And while you're doing that, I'll answer Andre's question. When does Holly usually trade? I waited for her like 30 minutes in the opening and didn't see her trading. We do not know. You know, these are there's a lot of filters and alerts that have to be in place for an alert to trigger. Just remember, she's equipped with not only a setup that she's looking for, but they have to satisfy all these numerous alerts that we kind of showed today in an earlier webinar that we were doing for support. So sometimes you start getting them about 10 minutes or 15 minutes into the market, and sometimes I've seen it go an hour without an alert. I think we've had one day where we didn't have any at all, if I remember correctly.
Yeah, that was after Brexit, and so
right.
Everything was upside down, and that proves a point. And it's a great segue, literally, right into today's Holly recap. So typically, on a normal day, the market opens up, and we'll start seeing some trades come out of the AI maybe 10, even 15 minutes after the bell. That's kind of on a typical day. Some of the morning movers looking for quick alpha scalps and things like that. But you would be correct. And let's just go take a look at the data points here. Entry time, looks like the first entry today was actually 20 minutes after the open. 6:30 is our local time. So maybe you didn't have your configuration set up correctly, or maybe you were stuck on closed trades. But going back to the time entry, we had two trades come out right at the same time, 9:51 Eastern, and then another one at 10 o'clock Eastern, and then another one at 10:17. And then it kind of really slowed down, and that's what I want to focus on here. You know, yes, a lot of times we get into the individual trades and breaking down the entries and the exits of an individual trade. But what you can also glean and take away from Holly the AI is a couple things. One, what's the directional bias? You know, I always say, take a look first at the directional bias. Nothing but long trades today. And that seemed to be the order of the day. The way we closed up, that's what was going on. Even though we did have one short strategy on the starting bench ready to go, power hour short means it waits for the final hour and it looks to go short. But there was no reason to trigger any shorts in the final hour of today. It was a very strong performance. And so getting back to what can we glean? Well, directional bias we can glean. And trade selection in terms of frequency. I'll call it trade frequency instead of trade selection. Trade frequency today, 6 trades, that's probably going to be in the lower 7 percentile of what Holly usually does. Typically, a end of day total trade count can be anywhere from maybe 15 to 25 or even 30 trades on the day. So this was a very light day. So 2 things were being told to us without even having to look at any individual trade. One, the directional bias, according to the AI, is long, path of least resistance, long, and very few and far between. Trades few and far in between. The AI Holly is not going to start spitting out trades just because people are waiting for something. That's something left to humans. We get bored and we start making trades because we're bored. The AI is not going to do that. And so when we see the AI being very, very selective, and I would call 6 trades by the end of the day pretty selective, you know, even midday by 10:17 Eastern, we only had 4 trades. You know, by 11:30 Eastern, we only had 5. That's pretty light. So that's giving us a clue that the AI is sitting on her hands for the most part. And that is a cautionary tell for us as well. You know, if the AI doesn't see a lot of reason to be making a lot of trades, then chances are the statistical reasoning behind that are we shouldn't be doing that either. So directional bias is always very interesting, and also the frequency of trades. If you want to take it a step deeper, you can start to look at the different sectors. What we're going to do a little bit later is look at some of the sectors off my ETFs, but one of the best things a new trader can do is start getting a program and learning who the players are. You know, learning what sector is made up of semiconductors symbols, what what symbols are made up of solar, what symbols make up financial and regional and banks. So the more you know about that, the more information you have. If you see that today, TAN, T-A-N, just click on that. That was the sector winner of the day. Well, what if CSIQ came through, SPWR or First Solar or something along those lines where you happen to know already, one, solars are kicking butt today, and two, Holly just found a statistically probable trade that happens to be a member of that sector. Well, that's something else that can really benefit you and help you in your decision-making process. So those are just some high-level observations that we have. The exit reasons today, real quick, for the people who are not familiar, there's 4 reasons that Holly is going to get out of a trade, and one of them is represented here on all of these trades. Stop hit, well, that's self-explanatory. That red gradient right there, the stop was hit as the price came down and traded through. Holly exited that trade for a 20-cent loss. Time stop. Well, if you'll notice on the parent window, we have what's called time stop. So whatever the strategy is, look across here and see what the hold time is. The bullish trend is a 90-minute hold, while sunrise mover, typically the ones that come out early in the day, are quick 30-minute holds. So going back to time stop here, this was on support. On support basically uses a 60-minute time stop. So for this particular trade, Holly exited in 60 minutes. And as it turned out, that was the wise decision, because this particular stock started to bleed off after that happened. Which brings up risk on, risk off, which is essentially 2 different ways of looking at the calls and the triggers made by Holly. If I double click risk off, this is going to basically sort everything that the AI exited on time stop or profit save or stop hit, and those are the values that we calculate for risk off to come up with risk off up 0.59% today. That's that column. Risk on, if we double click by risk on and we go over here and toggle over to the risk on histogram, we can see that throughout the entire day, risk on never really was the way to go. And it's not necessarily that this is telling you what to do, it's just giving you more information that today the way of the profitable success of the two seemed to go was quick hits, getting in and getting out along with the AI, because that's what the risk on, risk off histogram is basically showing us. The value is in the quick hits, not so much waiting around for the rest of the day. And one of the reasons is probably this AMT here, which Holly wound up making money on, 25 cents on this big push higher. But then as soon as you see that wick and that pullback, profit save is another word for trailing stop. And so in this particular case, the trailing stop of Holly worked well. She took her 25 cents, and the stock never really looked back. It just kind of bled for the rest of the day. So, you know, not a whole lot to go through today other than the fact that the AI was sitting on her hands and looking to go long for the most part. And for the third idea, or the third takeaway, quick exits on the recommendation of the AI was the way to go today, based on the risk off versus the risk on histogram. Anything you wanted to add, Mr. Andy? Any individual trades?
No, you're actually covering it very well. Yeah, there wasn't a whole lot. I wasn't too surprised at Holly. I'm not sure why. First of all, she didn't have a whole lot of strategies coming to the dance this morning, but we've seen it as much as 15 into 16, 17 in there. But yeah, I mean, some days you're just not going to have a whole lot of setups, and just did not satisfy all the filters in each strategy, and we just didn't get a whole lot of action today.
Yeah, hang on a second. I'm just going to quickly take a look here. Okay, so there's still some upside resistance on that one. At the end of the day, just to see, well, this is an ADR. That's not a great example, really, Ryanair. Just going to see if there's anything that's interesting that's worth holding on to and putting into a watch list for the following day. And I'm not really, this is way extended. I'm not really interested in that. However, one could make a case that you could use that level right there for a pullback. Matter of fact, I'll just show you a quick example how to set an alert. Right click in the chart, pullback alert, watch for bidders. That's what I always tell myself on a pullback alert. And this reason I used that alert was because prior resistance can become future support. So the stock's gotten ahead of itself a little bit. Not out of the realm of possibility that it could pull back to this level. Happens all the time. We see it in the history of a lot of charts that we talk about. So why not maybe try and get ahead of the curve and know that this was a really nice breakout today, but maybe it needs some rest, and that might be the proper level for that one to come back and rest on. And lastly, this AMT, I don't really have much on that daily chart either. So it's a habit that we do. We kind of go through at the end of the day and look for some of the calls that were made. I think Jamie did a good job yesterday in his webinar explaining how to take the symbols that you like and then keep an eye on them using a watch list. Mm-hmm. All right, a couple questions I see. I don't mind stopping. Can I set up the trades with Eastern? How can I set up trades with Eastern time? Andre, you want to go to Tools, Options, and basically set this up to be your own time zone. So time options. Right here, local time is what I have highlighted. And if you do your local time, it's going to know where you are, save that, and then everything that comes out in terms of timestamps, price stamps, it's going to be more local to your native time zone.
Now, if you do want Eastern time and you're not, and that's not your local time, you can still select that. Yes.
Yeah, that's that. I'm not going to go back, but that would be an option in the dropout. Exactly. John really wants to know, how do I see if QQQ is a buy now or is it a sell now? I don't really know. There's nothing telling me what to do other than what I have a history of. Now, if you're looking at the price gradients in the Trade Ideas charts, if you were to buy the Qs right here, I would probably adhere to this downside level of the gradient as your stop out, and you can see on the right-hand side it says Smart Stop. And on the upside, it looks like its target is up there around, I don't know, 144.70. I don't know what the Qs are going to do. I'm not in the business of predicting, but what I can do is try and narrow down things that look interesting and then set price alerts and then monitor them and try to focus on what they are doing. If I had to guess, John, the Qs have had a really nice bounce of 1, 2, 3, gap, 4, 5, 6, 7, 8 days. I'm not typically a guy who wants to run in and buy things on the daily chart that have had 8 green candles, because my luck, Murphy's Law, what have it, musical chairs, the music's going to stop and it's going to be time for some sort of a pullback. That's why I highlighted earlier in the session that this could be, if we get some weakness, an area of interest. But right now, it's just the train that's left the station. I don't know if it's got another leg in it before it has a pullback. I'd rather try and find stocks that are pulling back and setting up and creating higher lows with a base camp, getting ready to move higher. This, to me, is just really overextended, so I don't really have an opinion on where we go from here. I mean, if you'd have asked me yesterday, I would have said, hey, we're due for a pullback probably. We took out this high back here. We put in a little doji spinning top. You know, typically in the past, that's where we start to see a little bit of relief and pullback. But no, this market is confounding, and it's a zombie market, and it just keeps marching higher.
Yep, and it helped with Netflix earnings today, since they're a huge component of the Q. Yeah.
Certainly helped. But I think the biggest point I made is what I had said is I have never been one to come in and chase 8 green bars with a breakaway gap in the middle of that. That train leaving the station, I'm more likely to just let leave and maybe get a second chance, and that second chance may show itself on a pullback into this gap. We shall see. But I hope I answered that question okay for you. Good. All right. Let's see here. Are Holly's settings customizable? I know, Andy, you already answered that, but no, Armin, basically these settings are all customizable, the A windows and the T windows, and this is all our stuff that we're looking at here. But when it comes to Holly the AI, we don't see really what's going on, other than the fact that we know that there's about 35 or so strategies that all go back into the hopper and start from square one tonight. So what that means is the AI is going to go back and start back testing all of these strategies and coming up with scores of win percentage and profit factor. So we really don't have a say in what goes into the filters or the configurations of a strategy. And let me just throw this at you too. Sunrise Mover, this is a strategy that's been on and around for months. I guarantee you, if I could compare and contrast what the filters and the settings look like for today's Sunrise Mover versus the Sunrise Mover 6 months ago, they may differ significantly, because the AI every evening is back testing and making minor changes and minor configurations to try and keep the scores high to score well in the market that we have. And the market that we have is killing the short sellers, faking them out, buyers stepping back in. And so that's all stuff that's taken into consideration with Holly every single evening. Okay, so let's move on from the AI. And I see some questions here that want to look at some charts. And I did make a tweet earlier today, and we talked about it also in the technical support webinar, that I was watching Pandora. Let me back up even one more chapter. 2 Mondays ago, if anybody recalls the webinar that I was in with Jamie, we said, watch this level intently. Hertz was going to possibly threaten this level. On this bar right here is where I said it. And why was that interesting to me? Well, because it had a base it was building, and it built a lower, here's our pullback that I like, right? Not chasing this bar, but waiting for the pullback and then building a higher low and a base and then moving higher. Well, once it did that, then this level becomes the level of interest, the focal point, where the shares found supply and sellers last time. But what we have is our little secret weapon here of knowing that Hertz had 51% short the float on 85 million shares. So, you know, a lot of these trades I'm looking at like recently, I like them to have a high short float contingency, because that's just extra rocket fuel to keep these things maybe even going an extra day. But this daily chart, this has all the fingerprints and the hallmarks of what's happening with a short squeeze. You've got a huge short float, and smart traders that are short recognizing right here, I have lost my technical resistance point. I better start getting out before everybody runs from one side of the light boat to the other. And that's when you start to get multiple day movement on short squeezes. I mean, my God, Weight Watchers is the poster child for short squeezes. It's pretty much all it's been doing since back here, is short squeezing and moving higher until it works off the short float contingency. So Pandora, what do I think about Pandora? I would have liked to have seen it close on highs, but if you were live in the room, I was also saying on the contrary, I didn't necessarily care for the volume. The volume today, it only did 0.48. It couldn't even do 1.0 relative volume. Now it did go out, like a lot of stocks that go out with a little bit of extra volume at 293% on the 5-minute. But I think tomorrow is what is really going to be the tell, because people that come home today that are short this thing look and see that it not only traded above, but it actually did close above that level. So I would hope tomorrow the first thing I'll be looking for is relative volume out of the gate. I'd like to see it be at least 1.0 and continue to move higher on volume, and maybe we can get a short squeeze, kind of like we got in Hertz 4 or 5 days in a row. Because Pandora also has a short float contingency of 34%, the float. So one more thing, if you look up inverse head and shoulders in technical trading books, you're going to see something that looks like that.
Mm-hmm.
Shoulder, head, shoulder, inverted.
Yep.
So
now it might want to go sideways for a while to kind of draw that shoulder out, because it has had about a 35% move in 6 weeks. It's gone from $7 to $9.50, so that's a pretty decent move. So I'd be careful with it. I mean,
yeah, our RH has definitely had. I'm responding to Paul. RH has definitely had its day in the sun as well, and that's why it shows up. Where'd it go? On the Squeeze Me. Look at that. It's actually at the top of my squeeze me right now. Good eyes. The squeeze me is showing me things that are at or near or getting ready to break through a 52-week high, sorted by short float. So these poor people in RH thought they had it nailed down here, but the thing immediately reversed and has been short squeezing ever since. Now we're talking about the stock going through 52-week highs. Today was a mother of a day if you were short and on the wrong side of RH. So yeah, good eyeball there, Paul. So let's get into the trade of the week. Somebody's asking me about Crocs, which was a couple weeks ago. Now, Crocs yesterday tried. I looked over there and we had a nice green bar above yesterday's highs, this one on the open. Unfortunately, it didn't follow through. And I'm kind of throwing up a red flag on that. I don't like that. Crocs was in the money for 1, 2, 3, 4, 5 days or so, but has now since fallen back down into the range. So, I mean, at this point, you know, if you didn't take any profits, it's kind of back into no man's land. You know, if you want out of this trade and you don't be, and looking at yesterday and how it just keeps getting hung up here at this same level, it's not having a good time trying to break above this level. So, you know, these can be the times where you basically just say, well, that was the run. Unless this thing gets into gear here pretty soon, I'm going to probably have to cut it and move on. Ideally, maybe that low today, if I draw that line, you guys can see real quick. Hopefully that was the line in the sand today, there, and there. We broke just below it, right here on the opening. Okay, you can actually see it. Sometimes the counter move in one direction with a failure to break down is what we need to goose it back in the other direction. So that's going to be my line in the sand, I would say. If this thing can't come back and it wants to retest the low here of this wick, which is 742, then that's probably the best that we can hope to get out of Crocs. After a nice week of up movement, it just fell back into the zone. It's not doing anything. But like I said, today could have been that little test where it's the counter move before the big move. Let's hope that that's the case and we can move back above this orange line. But if the price comes back and tries to take out the shakedown, which again, guys, it's no surprise. You've heard me preach this over and over. Where do the stop hunts try to occur? In the first 15 minutes of the day. That's where the algorithms try to shake you and stop hunt you out of your shares. And that's exactly what happened here in the first 15 minutes. So this is a great benchmark to use as our downside bogey. I would say, to answer your question specifically, we do not want to see Crocs trade back below 742. I want to find the squeeze me scan. I can put the squeeze me scan in here. I mean, it's all over the place, but I don't mind popping it into the chat window. And again, it's just looking for stocks trying to break above 52-week highs with a high short float. But it's still up to you to mark up the charts and determine when to take the trade. It's not going to ring a bell and tell you when to take that trade. Okay. Crocs, yeah, the Crocs short, somebody's, I think, the short float in Crocs, 7.22 is just not enough, James. You know, I need 15 to 20% before I get interested in the short squeeze. All right, Richard, yeah, we'll get to that one. So after Crocs came PayPal. And once again, what are we doing? We're fishing for stocks, breaking out to 52-week highs. However, this one, really no short float. So we couldn't really rely on the short float on that one. All we could rely on was the fact that this price level right here had been pretty much showing the level of resistance, 1, 2, and then this was our breakout. We were already called the trade here. But, you know, you want to look up cup and handle in the trader's technical book. Starting to see kind of a cup and handle here. Cup and handles are nothing more than price level hitting a resistance, pulling back, hitting that resistance again, but doing a more shallow pullback and digging it at a higher low and then moving higher. So the trade was called, we got a gap up, and it was basically filled right where the 54.94 was called. Following day, a little bit of a hiccup into the gap, but then a nice breakout, just a complete breakout on huge volume. I think there's a couple of upgrades in there. And now we're not looking back. PayPal has closed on highs today. Now, a couple more thoughts on PayPal. There is no short float to rely on to maybe propel this thing higher. If we look left, we don't have any prior resistance. We are in blue sky, uncharted territory here. And if I recall the email that went out, the technical target, for lack of a technical target, was 60, because that was kind of a 2-to-1 risk-reward ratio. Well, we're getting awful close to 60, and look at that. The AI even has the profit target right there at 60.05, so it's kind of giving us the same thing on today's computation. But here's what I'd like to say. 2 things. 1, we're in the money. I think it's up almost 8% now. 2, if we do, and hopefully we do, get to the suggested profit target, which 60 is a round number. It's a psychological number. It would be great to get there. But there's no resistance above 60. So there's nothing that says in your playbook of trading that maybe you should consider selling a third or even a half if we're lucky enough to get to the upside to profit target. So then you've made all of this on half your shares, and you're getting out because you're not getting out of half because there is really no resistance left over on the chart. It's just a psychological number of 60. The second reason in which you would like to maybe consider selling half is this guy right here. We got to keep a close eye right now on the earnings date. We still have 6 full trading days to let PayPal work its way higher for us. But in 6 days, we got earnings coming. The way the stock's been trading, it would be great to trust that it's going to have a great upside earnings surprise, but we never really know that. They can always dump something else on us. So one of the ways in which you can take a stock into earnings is to take a nice profit on a half chunk of it and let the other half roll. Or you could even consider maybe taking profit on all of it, taking some of those proceeds and putting it into maybe your downside, is limited to $100 or $200, but at least you know what your downside is. So that's what I wanted to say about PayPal. I think it's on a foregone conclusion. I think it wants to hit 60. It's just a matter of what you guys decide to do with it when it hits 60. Sell half or keep the other half or sell the whole thing. All right. How are we on questions? Oh, we got to go to HLF is this week's trade of the week, okay? So, kind of the same old thing. I don't have it handy to show you, I don't think, no. But if you saw the email that went out for the trade of the week, HLF was on the Squeeze Me, it was on the Squeeze Me, just the one I had pulled up earlier and the one that I've also shared. And in order to be on Squeeze Me, you've got to be within 95 percentile of your 52-week high. So it had dropped off of the Squeeze Me alert. Now, last Friday, it was very much near the top because HLF has 34% short the float. It fits that filter. We've got earnings in 10 days, and it was very close to breaking out of the blue line. The blue line is the conditional trigger. So in the email, hopefully you read it word by word closely, was conditional upon a breakout above 74.59 or whatever that level was. We did not break out. Here's yesterday and here's today. So we didn't even come close. So the good news is this trade is not live. It has not been triggered. However, there's nothing to say that tomorrow we can't get a complete reversal and this trade is open Wednesday, Thursday, Friday. If any of the next 3 days this week, HLF decides to trigger and break above a 52-week high, well, then the trade is live, it's on, and we're looking for a short squeeze moving higher. But for now, it's no harm, no foul. And this is one of the reasons that we just don't come in Monday morning and say, buy HLF at the open, because it was basically in no man's land. We wanted to wait until we got a trigger and a reason for the short sellers to literally start sweating it out. And they don't have that reason yet. So anything you want to add to that trade, Andy?
No, you're totally right. It's in no man's land, and there's no reason to do anything right now. It's right in the middle of its range. That's why we wait for those critical levels.
Yep. Can you share the sector ETF? I can share that. The problem is, though, is you're going to have to create your own watch list of ETFs. because if we look at the configuration, the symbol list is enabled here. There's 28 ETFs that this alert is looking towards. So I'm happy to share it. If you want a list of those ETFs, you can email info@trade-ideas and say, please forward to Steve, and I can reply with those ETFs. But for now, I'm happy to copy and share and drop that into the chat window. Okay. All right. Let's just quickly move on here to the sectors. I think, wow, time's going fast. So last week I'd mentioned that the solar sector I thought was interesting, and here was the daily chart. I thought the solar sector was interesting because it pushed up, found resistance, pulled back here and based, and then created one green candle, and that's where we were. That's where we were. The last time I left you, I said, hey, keep an eye on this solar ETF. It looks like it's trying to build a higher low and maybe push higher. And that being said, you may want to set some alerts on the solar ETFs, and if the alerts trigger, then you can start looking around for solar opportunities. Let's see here. All right, so I was going to quickly go through some of these. UNG still looks horrible. KWEB, which is the new ETF that Andy's got me using for China stocks, is kind of interesting. It's kind of it's approaching a bit of a double top here, and maybe have even broken out just a skosh today. So if there's any follow through tomorrow in the China stocks, this could be why. But we'll have to watch this ETF closely tomorrow if it wants to just pull back into the range and use that last level as resistance. Otherwise, if the if the KWEB ETF pushes higher, some of the China names might start kicking into gear tomorrow. IBBs, kind of a mess. It had a beautiful flag on the daily. It's broken out and it's had some volatility since then, but the path of least resistance is still moving higher on the IBBs. Okay, silver is just the commodity. Treasuries are, I don't know. Oh, a higher low, and then bam, it kind of ran right into a similar, very close to that resistance again. So that, along with the OIHs, if I put the OIHs in there, very similar. So oil service sector, guys, if we see oil move higher tomorrow and you start to see some oil sector stuff, rigs and nat gas and natural gas and oil start to move higher, it could be predicated on what we've got going here. Oops. On the sector ETF. They may be ready to break this horrific downtrend, but we're not there yet. But if we can take out that prior resistance, we may be on the beginnings of chance favoring the prepared mind, looking for some energy plays or oil service plays. Technology looks just like the Qs. Healthcare hanging in there. Healthcare went to new highs, pulled back. Looks like it's built a nice base here. Now it's trying to move higher and still in no man's land, but a nice candle today nonetheless, but nothing super compelling there. Semiconductors are going to look just like the technology spiders for the most part, but getting a little consolidation here. There could be a move above that consolidation at some point for the semis. And what else? Spiders, we did that. IYR, FXI, we're not going to do. The financials basically hit their resistance and have been pulling back ever since, but one could argue they're digging in and trying to possibly flag. So I think that's pretty much the most part of the stuff that I liked that caught my eye earlier is the OIHs. Keep an eye on those, and possibly the China stocks, the KWEB. Solar, has had a really nice run, but again, we're not in the business of chasing. We're in the business of trying to find levels where they get hung up, pull back and build a base camp and then push back through higher. And that's what we were talking about last week. So that in effect, you did follow through. All right, so those are a couple of the sectors that I think are interesting, the oil services and the China stocks. We'll keep an eye on that. All right. How can you access the trading room in the morning? I know that was answered to you, Lisa. You should have a link for the trading room. It's not the same username and login that you have for Trade Ideas. It's a free service to anybody that wants to. You just got to create your own new username and password to get into the live trading room with Barry and a few hundred other people. All right. Are we all caught up, Andy?
Yep, we sure are.
All right, well, we're all caught up and we're at the top of the hour and we've looked at a couple charts. That's about all I've got for you today. Andy and I are pretty much webinared out. We're going to rest the voices. And if you want to drop by the technical support forum tomorrow, it's between 7 a.m. and 11 a.m. Pacific, or 10 to 2 Eastern. And it's come one, come all. It's just like the format we have right now. You guys can ask questions using that questions box. We'll do our best to answer you and give you visual demonstrations. It's probably the best thing that we've done to help accommodate the new people coming in for test drive, because it gives them a really nice, quick walking, crawling to walking to running start. So appreciate the feedback on all that. Appreciate the feedback you're sending us right now as we speak. Thank you, Kevin, Paul, Nicole, Lisa, John, Ashley. That's it for the trade of the week today. If you're not a subscriber, hang on, because Scott's got a teaser for you to think about saving some money on your first month of subscription using a promo code. So come on in, Scott, and show them how to do that. I'll unmute your mute for it. Oh, no, there you are. You got it.
Yeah, my GoToWebinar is not as responsive today as it usually is. Yeah, thank you. There's a podcast that comes out every Friday, so we want to make sure that everyone subscribes to that. Just search for Trade Ideas Podcast in the app that you use, and you'll get a fresh pod about an hour or two after the close on Friday. Keep your eyes open for that new one popping into your playlist, or download last week's and get a feel for it. We've got some great ones in the past too, with some guests that are worth tracking down and listening to in our archives. Just go to look for Trade Ideas Podcast. You can search for it in iTunes or wherever. We also have a product code for you today to jump on board and save if you want to get started now. And the code Sunny will save 15% off your first month or your first year of Trade Ideas, either standard or premium. Do keep in mind that standard and premium both come with a full hour of one-on-one training with Steve or Andy or Jamie. So after you become a subscriber and have attended some of our webinars and trading room sessions and watched some getting started videos, you probably have a bunch of questions. So then you can book your one-on-one trading session. Just go to the support section, click on training, and do that. We are still signing people up for the test drive event. We've extended the sign-up deadline through midnight on Wednesday, and even if you sign up as late as Wednesday night, you'll still get a 5 full days of the test drive. I think you can change slides here. Go to the next one. If you can still get 5 full days of the test drive, just go to tradeideas.com/test drive and join us for this. So if you sign up by midnight tomorrow night, you still get Thursday, Friday, Monday, Tuesday, Wednesday. It's just that next week we're not having the special webinar sessions for help. All right, thank you, everyone. Thank you, test drivers. Thanks, Steve and Andy. And have a good evening. You can reach out to us with the contact information. There's a handout available in the handouts panel. If you expand that and click on the download link for the PDF, you can have some of these slides for your desktop. All right, thanks all.
Thanks, everybody.
Talk to you later. Bye-bye.